So the company that I've been doing this semester for our assignment has been AECOM. It's a engineering uh, managerial company slash engineering firm. Through the past, they were started off by a subsidiary. They were a conglomeration of multiple companies, and they started being traded worldwide back in the early 90s to mid to or early 2000s. Um, so for the major part of this company, what they've been doing is they initially were there for construction, dealing with other processes to make sure that a project was done correctly. And seeing that there's success with this, they then switched over to the role of managerial positions. So they manage construction, or they manage a company, or they advise them on what they need to do to increase their profits, to be more effective, to um, show that they're worth something in some roles. Recently, a lot of the projects they've been doing, majorly wise, have dealt with the World Trade Center that was constructed in New York, the new one. Then they do a lot of training with the United States Navy with submarines and other assets with the Navy, but that wasn't really talked about from a lot of the information that I found. And then, so they also have been doing a lot of mining work in India. Then at the same time, they've been doing oil refinement and oil extraction processes and roles in the Middle East. And as of late, they've been building a lot of roads in Africa that, from data that I found in other articles listed on their website, and other things about people talking about them. So the information that I took out of AECOM came from their website, and then their investment information and their stock information. So as with any company that have investors, they're going to want to try to maximize profits, so more people will buy in, and that helps generate more profit for them. So the company has been changing around what they've been doing, because back in between 2015 and 2016 they lost some funds, and it was probably about close to 15-20% decrease in profit. So they've been trying to change what they've been doing to make it more lucrative for themselves and their investors. So what they've been doing is they've been trying to trim the fat of what a company has and its total assets, what where their money's coming from, what they're doing to make their money. So what they're doing is right now they're basically consolidating all of that and reinforcing it. I mean, with any company, you're always going to have that wasted funds, but what they're trying to do is they're trying to prevent that, and that's what they're trying to market themselves to other companies as, is being like, hey, we can do this to our company, we can do this for you. So that's what they're trying to do. They're trying to make themselves look better at the same time, but also try to increase their profit, but also who wants to work with them or who wants to hire them to manage them. So the information that I found and used for the assignments in the class recently, so the where the money came from, that assignment, most of the information I came from, it was about 300 pages of financial information that I went through, that was either listed, as I said, through their website, or the information they gave out to their stockholders and shareholders. But that was fairly difficult because I have never been introduced to it before. So even though this is an economics class and not a business class, it taught me a lot about business and how they're managing and what they're trying to do to meet their bottom line, but also at the same time cut costs. Just seeing off the documentation of what they were spending from 2015 to 2016, 2017, they're trying to consolidate because they saw they lost money. So since after 2015, they've been taking 2016 to 2017 and 2018 now. They're trying to make sure they limit what they're wasting their funds on. But at the same time, that's fairly hard for a company. Most of the information that I found from this was, I enjoyed the articles that I read. I enjoyed all the information, figuring out where all the money was coming from, and what they're going to have to do to, make sure they keep making money is by looking at their risk analysis. So most of the stuff they've been doing as of late have been, fairly safe investments, or projects that they're taking on, and that's good for the market when it's in a influx. But right now, because the market is making a lot of money, it's also very high confidence. They need to get in more lucrative or risky scenarios so they can actually try to maximize their profits, because with an easier investment, it's not going to continuously make money like that. It's going to be slow, but as they do more risky ones, the amount of profit they can make will significantly increase.